its latest World Agricultural Supply and Demand estimates, the USDA projected 2012-2013 soybean yield at 36.1 bushels per acre. Its corn yield of 123.4 bushels per acre would be the lowest yield since the 1995 growing season. We started our marketing segment this week by asking Elaine Kub if those numbers were best case scenario, and anything lower is already factored in.
The saying, or the cliche, is a short crop gets shorter. And that could certainly be the case this year. If we look at 2010 and 2011 as comparison years of recent years when you see kind of a disappointing crop, we certainly did continue to see a trend all the way through harvest, a higher trend, because yields were disappointing and USDA kept shaving off their estimates. But in this case, you know, it's a guess. And there's a lot of the farther fringes of the Corn Belt that usually aren't as large of a contributor to the overall production are the areas that might do better. We're talking about Minnesota, the Dakotas. They really have not struggled in the same way that Illinois, Indiana, Iowa, and Nebraska has this year. So I think there's going to be more of a guess, and it'll be a continuing discussion over the next couple of months.
Can those states factor into price at all? I mean, are they going to have any effect?
I think so. I mean, if you look at southern Minnesota is one of the top 10 regions of producing corn. So really, since in the past 10 years when we've seen better corn varieties come on the market and the expansion of acres to all of these areas, they really are becoming a bigger player. So yes, I think there's a possibility if we're going to see a harvest slump in prices, it will probably occur around that time frame that they're being harvested. Let's
talk about soybeans. All right, South America crop doesn't go until January, so that means that the phrase is the window is open for U.S. soybeans. Does that mean that the window is only open till January and you need to sell before then?
I mean, yes, I think if you look at a time frame, a seasonal time frame of when you might hit the best prices, that would be the way to go. There's going to be wild basis at this time frame because I think everybody's going to want to unload their beans at harvest or very near harvest. I think there's going to be very little bean storage going through the 2013 calendar year just because the opportunities aren't going to be there.
And 2013, does that also mean you need to contract out before then a decent portion?
Well, 2013 production, you know, like I said, you're not going to be bothering marketing old crop beans, I don't think, through that year. So you're going to be looking ahead to your production in that year. And yes, I think, you know, there's a real possibility that if we ever get reasonably normal weather, we could have very large production. And you might be looking at these prices now as a good opportunity.
Let me have you tee off on ethanol here. We're seeing increased production at a time that prices are still remaining high. How long can that continue?
Well, as long as the crude oil markets, you know, keep reimbursing them and the DDG markets. Right now, they can turn around, some ethanol plants are selling DDGs for nearly 100% of the price of corn. So if their byproducts and the ethanol itself continues to have a higher trend, they may be able to stay solvent and keep going. And I think there is some hope that the overall commodity markets might really get juiced up here. China keeps making noises about adding in some stimulus. So that would certainly affect the crude oil market and energy in general, and that would help ethanol in general.
How concerned are you that a waiver could factor into what you do for 2013?
I think any reaction to a change in the government policy on ethanol would be probably a severe reaction in the short term, but long term, the plants and the industry still needs ethanol to blend with gasoline.
Right.
I mean, the economics are still there that make sense to keep doing it. So overall, I think the demand will still be there.
As volatile as these grain markets have been over the past 4 weeks, let's say, what are you seeing for speculators? Are they still coming in and playing?
No, we're not really seeing a lot of new activity from them. There's certainly a lot of interest. Certainly for soybeans, we did see large amounts of speculative participation, but they largely have stayed out of corn. Certainly a drought story. We see a lot of media coverage, and you expect to see a lot of speculation come in when there's a lot of media coverage like that, but it hasn't occurred just because these are frightening times for people. They're more interested in preserving their money, you know, in having safe havens for their cash rather than, you know, a lot of these riskier investment ideas.
When you look at either corn or beans, are you of the thought that corn could be something that goes to double digits and beans could be something that goes to $20?
I am not looking at that at
that's
this
disappointing.
point unless the dollar changes. You know, I think the dollar right now has stayed off of making new highs, but that is still something that could come in and really make that happen. The global economy having a stimulus being, you know, less of a concern about demand destruction, that would, I think, is what it would take to see more extreme record highs.
Demand destruction that hasn't already been factored in, you mean?
Right. If that does not occur.
And how much more is there to go? realistically here?
No. I think people understand, the economics of whether or not they can use the grain at this price or not. Livestock feeders are doing the math. Ethanol plants are doing the math. And I think the situation is fairly well known and fairly well priced in at this point. So I'm not necessarily looking at a significant change in trend. It might kind of drift along here for a while.